Right. So what we're now dealing with is actually trying to work out what tax we should pay. And so HMRC use the band rates, the basic rate bands, and sort of say, okay, well, listen, what's left within this your first basic rate band of 34,500? Whatever's left there, tax at 10%. This is a normal products or normal assets that we're disposing of, anything apart from residential property, and everything else above the band rate for higher and additional rate taxpayers, it's at 20%. Right, but for property, it's replaced with 18% and 28%. So we'll see that ultimately, what you want to try and do is, if you have assets in both classes, what you want to do is almost deal with the assets in the residential class first to reduce the amount of tax you have to pay. And tax is paid on 31st of January, kind of in line with your self-assessment as well. Right, so let's tackle a question. So what we have here is we have our friend here, Ahmed, who has chargeable gains of 33,300. Watch out for this idea of chargeable gains. What I'm interested in is a taxable gain. So Ahmed really is entitled to personal allowance of 11,700. So 33,300 minus 11,700 brings Ahmed's taxable gain to 21,600. Now he also has income of 1,370, taxable income, and he has a band of 34,500. So 34,500 minus 1,370 is 331. So he has 33130 available, but he only needs 21,000. So all of that 21,600 can get taxed at 10%. So that gets taxed at 10%. Right. This, of course, we're not calculating this, but this would have been taxed at 20%. Right. That's normal income. Now, what would have happened if he had taxable income of 24,855? Well, here he would have had 24,855. Let me see what's left. The band is 34,500. So what is left there? 34,500 minus 24,855, and he has 9,645. So 9,645 would get taxed at 10%, and the balance, of course, of this 21,600, right? Because that's minus 21,600 is 11,955 will get taxed at 20%, and we would basically, so that's 964.5, and if you like, I'd find that 11 times 0.2, that's 2391. 2391. Add the two together, and you should get your answer. 964.5 gives you 3355. So 3356. I'm just going to round up to that. Right? So let us carry on and see what happens next. So this question of dealing when you have two classes of assets, where you have investment property or residential property, buy-to-let type thing going on, how do we deal with that? So I have here a scenario where it says that he has taxable income of 27,500. 27,500 minus 34,500 means he has available 7,000 in his basic rate band. And these are the assets I'm dealing with, a painting and a residential property. So what we do, first of all, is to, like I said, is to use that capital allowance, that annual allowance, forgive me, against the residential property, because this is going to get taxed at a much higher rate. So I need to reduce it as much as I can to prevent it being taxed at higher rates. 20,600 minus 11,700 brings me down to 8,900. So what I then do is, well, say, okay, listen, that's that out of the way. I only have 7,000 left, so I will tax 7,000 of this at 18%, and then the other 1,900 at 28%, and then all of this gets taxed at the higher rate of 20%, and that's how you manage that situation. Anything else would lead to higher tax, because that would mean that the bulk of this, if you do this first, the bulk of this is going to get taxed at 28%. All of it will get taxed at 28% if you do it in any other way, and that's what you're trying to avoid. Cool. Great. Yeah, I think with there are three key points with capital gains. You can plan when you dispose of assets. You can choose to split them up and sell them in a way that you can offset the loss against your annual exemption. That's the aim. You can do that on a piecemeal basis to take advantage of that. And if you like, plan it to deal with any capital losses you think will happen. Also, you have to be aware of your income, so you remember that it gets taxed depending on how much of your income band rate is left. So you might be able to give it to a spouse or someone along those lines who has more band in their income. So delaying disposals to take advantage of further AEA might be a good idea. Piecemeal, breaking it up, and making sure, trying to utilize the band rates as well. So just being as creative as possible with the band rates, with the bands. Um, and that brings us to the end of that chapter. And so that's kind of chapter 18 done for capital gains. So we'll start looking at special rules with capital gains in the next chapter.